Hello guys, welcome to the Trading Parrot. My last video was on Friday when we were seeing the potential to break down on the 4 hour. On Saturday, I couldn't put out a video, but I made sure that on Telegram, Instagram, and Twitter, you stay up to date by the hour with the progress. At 9 AM on Saturday, I post this picture showing you that we had a confirmed breakdown on the 4 hour. Since then, we have seen some cool down, and I want to talk about what I'm expecting for the remaining part of the weekend, potential price action that we could be seeing on Monday. Thanks to both ETFs and CME coming back live, I'll keep you up to date. We have some signals coming in from the hive. On the daily, we are also experiencing some breakdowns, resistance on open interest, further deposits from big whales. And we'll look at the weekly as well because we are about to close a weekly candle. We'll keep an eye on liquidation pools, of course. That is going to give us hints on what could come next week. New interesting levels developing on the lower end. We'll keep an eye for those. Delta, selling wall. We got a lot to cover, so let's get on it. I'm trying to get this video to stick to less than 15 minutes, guys, as you've been requesting. Wish me luck. I hope this time I can do it. I won't be able to squeeze some important information from some signals applying to Ethereum at this point in time, the altcoin season, and the ongoing rotation from Bitcoin into altcoins. I'm gonna put that in a separate video coming out on Coin Bureau Trading. Make sure that you're also following me in that channel so you don't miss that second video that is coming out today as well. Guys, if you like this type of content, make sure that you're subscribed to the channel, hit the notification bell so you get notified every time I put out one of these videos. And thanks so much for the over 400 likes on the past video that I published on Friday. Let's hope that today we can get over 400, maybe 500 if I make it to 15-minute long video. Crossing fingers. Guys, in the top link in the description, you are going to find the best deals for Black Friday that I have been able to gather myself. These are the ones that I like the most, starting with TradingView that is currently offering over 70% discount and 1 free month. Trading Different, of course the Trading Parrot, 40% discounts on yearly plans, High Block Capital 70% off, Gainium 70% off, already 25% off. You can find the link to this particular page at the top of the description. Go on and have a look because the discounts are really great. And if you've been wondering which bots I'm currently trading, I'm just gonna very quickly show you many bots that I have switched on. Some of them have been running for over a year. You can see in the center the performance of this month, and on the far right you're gonna find the performance since they were switched on. The Scalper Conservative, Aphrodita 22% this month, Aggressive with 40% this month, Moon River 16%, Absolute No 13% this month, Messenger 7%, and so on. If you want to have a look at these bots, you're going to find also a link down below called Copy Trading Bots in the description. Alright, we are 39.5% for the month of November. We're less than a week away from finishing the month, and there are tons of questions from people on my Telegram channel. I'm gonna try to answer all of them, but again, sticking to a shorter video. And one of the most common questions is, everybody's expecting a pullback somewhere in November based on past performance. So far, as you can see, we started the month with 3 days of 3%, 4% downside, and that is nothing because after that, we have done 40% to the upside. And so far, this move down from the highs is just too shallow to be considered a pullback. It's not even the start of a bull flag. So if we want to look into past performance, you can look at all the gray areas. Those are all Novembers. Of course, the green is October's, but if it's got an arrow, it means that is precisely at the same time in the cycle. For example, in here we have 2020. And although at first sight you might think there is no pullback in November in here, from the highs of that candle we can go 16% down, and that happens after the second third of the month. Every cycle there is less volatility, is diminishing, so expecting the same is low likely but still possible. So if we were to move 17% or 16, we could get into 83K, and that shouldn't surprise anybody because that wouldn't even count as a retest because the retest will be to come literally to 64K. Just keep in mind the number 64K, which is gonna resonate by the end of the video in confluence with something else. I think is very low likely, but just for the fun, interesting that the trend line of the megaphone pattern shows 64 in here, and later another indicator says 64. So when I get that itchy feeling, I tend to never discard these things, just to put them on the table along with all the other evidence before I draw conclusions. Going into December 2016 and November, you can see that there are some drawdowns, particularly this one at the start of the month, which is less than 10%, and then we got a shallow 5%. It is actually in January when we start seeing those huge drawdowns of 35 again, and 40%. So you can see 16 past cycle, 2 cycles before, no more than 10, and we continue to look in here at other Novembers, but those are not equivalent. And in 2012, where Bitcoin was pretty immature, there was literally no drawdown. The drawdown happened actually in October, which is typically the month where we take for granted the profits. So it was upside down year. There are some very terrible Novembers as well, like this one of 50%, but that's in the middle of the bear market. And the same in here with FTX with a 27% in November, but again, that is the final capitulation of the bear market. So thinking about a 30% now to get into 64K sounds like completely nuts, and it will really require a black swan event to get there. So you get your answer. You may or may not get it in November. If we don't get the pullback in November, then it's high likely that in December or January we get a decent one. But we won't get away with just going up. That doesn't exist. And if you observe the previous cycle, not just the November 16% that we already talked about, but in January there was a 31%, then in March 25, ending up with a 50-something% in here, I remember, but that is going into April and May. So it's not a matter of if, it's a matter of when. The interest from retail is still here. It has taken just a small dip, but with a huge higher low at 42, which relative to the 20s, which was the previous high, is extremely high, just like the price is doing as well at the moment. Inflows on Friday were half of what we saw on Thursday with 490, but still very strong. And the greed and fear index has taken a cool down, going straight into 80, which is just one number away. I believe at 80 or at 75, we turn into greed. Now I forgot. But definitely in this proximity, if we focus on this action from the bottom to the top, this is the first time that we put a lower low in terms of the greed and fear index, or fear and greed index, the same. So paying attention to this move, which is consistent with what we're gonna see on the 4-hour time frame, which is a breakdown on the shorter time frame. We are days away, less than a week from closing the month, and this is looking pretty cool, very similar to what we had in September 2021 or November 2013, which both led eventually to coming down on the stochastic RSI monthly and eventually landing in a bear market. But don't freak out, because this is very condensed. This is a monthly chart. So even though it reaches that move up like a dead cat bounce, this still made a huge move of 1000% up right after this bottom and then the dead cat bounce. So although they look like nothing in the stochastic, in the price they can still put a new high, which by the way we have already done, thinking that this is the high at 99 stochastic RSI with 73.5, and now we are almost at 100K with the stochastic RSI being in the middle of the range. That repeats that, but we need to be very cautious if we resume the move down below 20, because we never survive below 20. Something to think about later. At the moment, let's continue enjoying the rally. And on Friday, we closed at 99.8, price at CME price, which is more expensive. The price has moved so far down to the 97s, and it has recovered to 98. So far, building a very shallow CME gap for the weekend. Of course, we haven't completed the weekend, but if we were to do that, it will maybe look something like this, with that gap of just $1,000. In this case, was $2,000. And you can see that on Monday it took just a few candles to come back and close it, possibly 6 or 7 hours, and it was already gone, 2K gap. And that is because the price had to continue going up following the current trend. So it made it very easy to close, whereas this gap in here was left below the price, and still we haven't come to 77 to fill that gap. We dodged the bullet on the MACD to close the bearish cross, and we seem to be now pointing towards maybe 2 or 3 days to produce that bearish cross. Impossible to tell, but we are already beyond the highs of March on the MACD, where we put that bearish cross and then we had that correction. So it's a very early signal for a potential pullback coming in, but it's really not telling you when it's going to happen, because this could close the mouth in 1-2 days or maybe in 2 weeks if things continue very strong. But as you can see, the histogram continue with the trajectory down towards the 0 line, and it will be very interesting to see if getting there is going to be just continuation or the beginning of one of those larger pullbacks that happen within bull markets. And on Friday we were chasing the breakout above this line or below this line. We left things open as usual, and we let the chart tell us what's gonna be the direction. And at 5 AM on Saturday, the chart was screaming that it was gonna be to the downside. I published this at 9 AM when I woke up, and it continued to go low. And as you can see, the RSIs on the 4 hour are currently resetting. It tests the median, it dragged the median down. The momentum at the moment is a channel down on the 4 hour. So if price continues to go higher, those are bearish divergences, and if price follows what the RSI is doing, it's just gonna help the higher targets to go way higher than when we were inside the pattern. Our support at that time was 66, the one that got broken. The median is at 62, and we call out for potentially resetting into 40s or 39s, which is the support on the 4 hour. That support currently is located at almost 95K, 94.968. We got 2 fair value gaps in here. And if we focus on the price action very closely, we can see the line orange that represents the support that got broken at 66, which by now is going higher into 69. So it's no longer valid, the orange line, but you can tell that we left in here a precedent, which is that we were holding this horizontal line. We broke with this order block. We came back up, and now we are retesting it, and we are printing by the hour right now a 4 hour engulfing red candle. So there could be potentially, if we close this candle, which closes in 2 hours, and if we close it like this, there could be some evidence of potential continuation to the downside, maybe to get this fair value gap at the 96, or the second one for a more aggressive target at 95. But remember that support is 94.9. Don't assume that it needs to stop there. That is just support. Sometimes the RSI during the intra-candle action could get in here, pinch 30, and then still end up closing at 40, and that still counts as reaching the support. But in the price, that can perfectly go beyond and then back above and closing right here and just leaving a small wick or a large wick to the downside. Just preparing you for options so you don't think that everything is so square and rigid. On the daily time frame, we got some interesting things, starting with the same thing that we saw on the 4 hour, but now delayed by the end of Saturday. 4 hour broke down at 5 AM on Saturday, and at midnight starting Sunday, we are just seeing the breakdown of the 1 day. Confirmed at the end of Saturday, now we have a candle in progress, which is this tiny thing here, which is pointing to the sideways. But what this is saying is that the most likely scenario is to come back and test support at 56. Of course, the trend currently is your friend, so we got one bullet pointing towards going down. But if we put this in context, we are in a very strong uptrend. So to short this, you have to be a degen kind of trader, because you are literally doing a contrarian setup against the trend, and that usually ends up bad. So you need to manage your risk in case we break above 100K by Monday when the markets open, ETF volume comes back, CME reopens, and you got all those things against you. So be very careful to take this sort of short setups. I know that some people on Telegram are taking them. They say, I went for the degen, I'm loving it. And they already probably were in profits because our call was at 9 a.m. and then we continue going lower into 97K, and there could be potentially some continuation lower as we cover in the previous charts, but it's very high risk. Price could come and trick the shorts, taking them out by just hitting that resistance that now is at 86. Before it was at 87. I think that is very low likely to get broken above for the same reasons I keep sharing every single video in the past week. So we got 86 and support at 56 on the daily. We need to move the support to 56. So that move to 86 takes us into almost 110K. So if you are in a short, that's how high in the horse can kick back and trick you and just push you back again against the resistance at the top. That is totally doable. We saw this move up in here and it can do it once again, just because the trend has been so strong. So don't be surprised with those situations. And that is regardless of the Hive daily sell signal that tends to be extremely strong. This is capturing an aggregation of bearish divergences coming from a long list of indicators. It's one of my custom indicators included in the subscription to TTP. And it's got pretty much 100% performance when you are in a bear market with the sell signals. On the bull market, you can see that it provides less performance. In here, it was just pretty much a 4%. If we go into the bear market, that will have been like a 20-30% drop. In the bull market, it's a 3%, and sometimes it's nothing. But it's good to know that here we have lots of divergences. Everybody looks at them, so we're not gonna ignore them. Open interest continues to respect my 1618 resistance when using the trend extension Fibonacci. It's a good feeling that our call was good. In here we have 4. We're gonna have the 5th day respecting this. If we break above 100K and we go way beyond with the gamma squeeze, I'm happy to be wrong, and then we are gonna have to move the line of the top of the open interest in this range to a higher level, and then look for that alpha just in a different range, but that's fine. I just think that 1618 is a very good guess for this explosive move that we already have in here. Interestingly, the whales are now back into accumulation, very small fraction, very similar to what we saw in November as well in here, that they spike in distribution, early sellers, big whales depositing, and then they started withdrawing again, coming back into accumulation mode, continue with the uptrend. And we are starting to see now a move down similar to that. That is a good sign. But what we really need for this to explode beyond the 100K, to get that help from this angle, from this alpha, is this to come back to 0.5, meaning that there's way more withdrawals than deposits from them. On the weekly now we are at 77 almost RSI. That is very high for a weekly time frame. RSI, particularly having had already levels of 90 in the same cycle. Thinking about the previous cycle, we got to 79 first and then we got to 95. In here we already made it to 88, so I start to wonder if we could potentially now continue and put high on the RSI. That will be really unprecedented and show that in this particular cycle, Bitcoin is really the king. All my eyes are on this stochastic RSI. If with the rest of today we saw a drop significant, let's say a 5K down, we could produce a bearish cross on the weekly time frame on the stochastic RSI. That could slow down things for Bitcoin, and I will suspect that if we do that, we could get the altcoin season to follow up, as long as that correction is a mild one. If it's a huge one, a disaster correction, then that wouldn't allow for altcoin season either. We've been still moving between 97, 98, 99 over the weekend, so here is all the liquidations, over 1 million during the weekend, and thanks to this usual very narrow range for the weekend, we always monitor which side is getting heavier. And as we end the weekend, we start putting our bets towards what side has the largest trap, but always with the mind open, allowing ourselves some room for additional tricks from the market maker. Remember last week we had heavier this, but we didn't go straight and hit it. So don't trade it like that. Allow yourself some extra room for something unexpected. Like for example, there is red in here at 95.5k. So we could potentially come there and then come back up, or we could go straight up, or they could be also some extra additional bearish news and then we don't take it either. The point I think in trading is not to be always right, but always try to aim for the thing that has the highest likelihood, while at the same time trying to keep in your setup some additional room for them to still trap more people in here. A move down just to there or just here without taking the red will make the red in here even juicier for then coming back on Monday and hitting it. And remember where this is located. This is above 100k. There is a huge selling wall in here that I'm going to show you just in a second that it has reduced in size. Now looking at the 4-hour swing chart on Trading Different, again, remember this one is part of the Black Friday deals. You get a very juicy discount if you want to have access to this data with the link at the top of the description. If we look at the chart like this, you will probably think that we have to go to the low end in here, making a 34,000 move to the downside, because that is currently the heaviest level. The problem is that market maker cannot move the price like this without any incentive, without any external fear or extreme fear, particularly in the middle of such a strong uptrend. So what we're gonna do is we're gonna take note of that level. We're gonna keep it in mind for a potential later come back when there is a crash. And that could be if there is a black swan event tomorrow, or it could be in March, summer, where typically we get corrections of 50%, and maybe this cycle is going to be 40-45%, which resonates with a move now of 35% down in this chart. So let's leave that for later, and let's only highlight up to the CME gap, which is 77k, that there is not much liquidity. We have some red at 80k, 88 to 89 is interesting in here. Also, it is 81, but definitely the close proximity continues to win on the 4-hour swing trade. This tracks a longer time frame span of liquidity pools, and they are just there 2k above the price. Very easy grab if we forget about the psychological effect of the selling wall. Don't forget to watch my video about the gamma squeeze so you fully understand in what context we are now that BlackRock is offering options, and you get kind of the mechanics of why they could potentially need to open a long position above 100k, causing that gamma squeeze to explode to the upside. Very interesting theories from there. And to the upside, for those of you that love seeing that there is potential for upside, you can see that now we have some new kids in town. Ending at 118.5, we have the new red area in here. This one we were already aware that ends at 109k, and the next one to us ends at 101.5, which could do just the trick to start that gamma squeeze if we get there. And as we spoke multiple times in videos this week, we were calling for this breakdown of the longs kind of taking profits and allowing for more shorts to enter, and that trend continues to be the case. Price is just going sideways, very similar to what we were seeing in this area end of October. Eventually those shorts gained some strength and gave some pullback. Those pullbacks were buying opportunities. If we enter in this red area in here again, I'll let you know in the videos or in any of the social networks, Twitter, Instagram, or Telegram. The selling wall is still here, but you can see if you pay attention that that yellow is becoming lighter, or actually darker, which means less liquidity. Let's observe just with the mouse if this is coming down. From 312 million, it has decreased now to 258 million. That is a typical behavior when the price starts moving away from a selling wall. It starts decreasing and it increases as it gets closer. And when it gets too close, you could also see that they pull out at the last minute, proving that it was just a psychological level to prevent the price to go beyond. The first time that these guys were shorting was on the 12th of November, and they had this plan of shorting in here for a long time. Again, watch my video about the options. That seems to be the most common theory to explain why that could be happening. We have some fair value gaps below the price from 96 to 92, vacuum up until 85, so it will be ideal to see a pullback just up until 92, 91 in confluence with some liquidity pools, cooling down the delta, cooling down the RSIs, reaching those lower end of all indicators to get ready for another push up. Will be very refreshing for the price. It will gain more strength, not just to break above 100k, but potentially to move those targets thanks to the reverse RSI to over 120, and maybe that's what we need to hit all shorts later. At the moment, there is a party of distribution, or we could say shorts. People placing their ask liquidity has been the theme from 21st of November up until now. They don't give up, putting limit orders above the price to enter with shorts. And that is the largest area with ask liquidity I can find. Now we are on the 1 hour time frame, but if you focus on the red below or on the red in the lines in here, it's difficult to find an area with so much interest for shorting. And just a quick update on the BTC top bottom weekly. If you have been watching last week videos, you're well informed that is reaching 0.38, very close to the trend line that we have respected since 2011. We're going away from the trend line now, which is good, because I will expect that if we get to 0.41 or 0.40, we are going to see a rejection from there. At least that is what Bitcoin has always done so far since 2011. Very careful with the SOPR. This indicator says that many people are taking big profits. If you have no clue what SOPR is spend output profit ratio, which is pretty much the ratio between the price sold versus the price paid. So the higher the ratio is, it means that people are realizing better profits. If it's very low, it means that they are taking big losses. Taking big losses calls for bottoms, taking big profits calls for tops. So the profits that they are taking in here are not as substantial as the tops, as the profit taking that occur in March and in June this year. So we still have headroom to go higher, but in my normalized version called SOPR Oscillator, also part of my subscription, we're getting very close to the top of the range, and you can see that in here it was calling for those tops. In this area, it was calling for these bottoms, and it hasn't yet printed the signal, but it's getting very close. On Ethereum, it already printed one, but Ethereum is a little bit trickier because I think it's got still headroom, and we could consider this signal similar to this, but more of that in my video about the altcoins coming later. You can see as well that it provides pretty cool entries for Ethereum and also for Litecoin. Guys, if you're looking for an exchange to trade Bitcoin and altcoins, high quality, good performance, good liquidity and volume, have a look at Bybit. I have a link in the description where you can claim up to 30,000 in rewards and get the lowest fees to trade as well. And if you're on the lookout for an exchange that doesn't require any KYC, no VPN needed, and you can trade from anywhere in the world and even have as many accounts as you want using different emails, then have a look at Bluffing. Yesterday, I started a new campaign that ends on the 14th of December, and this one benefits small accounts as well as very large accounts with very good bonuses. And not just the deposits this time, but also the trading volume gets compensated. Thank you so much for watching. I'll see you in the next one. Bye bye.